Hello friends, welcome back to my channel Namaste. Today's video is most awaited video for my viewers because I have received many queries for making video on reporting of foreign capital gain and what will be the tax treatment when shares sold by company for the tax purpose. So this video will clear all your doubts regarding calculation of foreign capital gain, classification and tax treatment of foreign capital gain, which schedule needs to be filled in ITR regarding foreign capital gain and requirement of filing Form 67. So stay tuned with me till the end, and if you found this video helpful, then you can buy coffee for me by clicking on thanks button. First we understand how to classify capital gain on foreign equity shares and what are the tax rate on that. For capital gain on foreign equity shares, it will be treated as unlisted shares. That means if we hold less than 24 months, it will be considered as short-term capital gain and it will be taxed at the rate of slab rate. And if we hold more than 24 months, it will be considered as long-term capital gain and it will be taxed at the rate of 20% with indexation if we sold before 23rd July 2024. But if we sold on or after 23rd July 2024, it will be taxed at the rate of 12.5% and indexation benefit will not be available. And one more important thing, basic exemption limit of 1.25 lakh is not available on long-term capital gain on foreign equity shares. And we can also claim foreign tax credit by using Form 67 if we has already paid tax in foreign as per DTAA agreement. Now let's understand this with one practical example. Here I am taking dummy example of a person who holds shares of Microsoft company. So company name is this, address is this, zip code is this, and nature of entity is company listed on US stock exchange. As per example, person received or purchased these number of shares on these different dates and at these purchase price. Out of these shares, 10 shares has been sold on 10th July 2024 at the rate of $352 and 20 shares has been sold on 19th December 2024 at the rate of $436 per share. Fourth and fifth entry I have taken to understand capital gain treatment when shares sold by company for the tax purpose. Here person received 14 shares on 24 April 2024. Out of these 4 shares had been sold on next day for the tax purpose at the rate of $405 and 10 shares he hold for the remaining calendar year. In FA we will require peak value of investment and for that first we will mention max price per share during the holding period in calendar year 2024. So for the first entry, holding period in calendar year 2024 is 1st Jan 2024 to 10th of July 2024. So max price would be this on 5th July 2024 and same is applicable for second, third and fifth entry. For the fourth entry, our holding period is very less from 24 April to 25th April. So our max price would be $410 per share on 24th April 2024. And next we need to mention closing price per share on 31st December 2024. For the first 4 entries we have sold, so closing price would be 0. And for the fifth entry, closing price would be $421.50 per share on 31st December 2024. Now we need to calculate total value of investment. So first is initial value of investment. So initial value of investment would be number of share multiplied by purchase price per share. Next is peak value of investment. So peak value of investment would be number of share multiplied by max price per share. Next is closing value of investment. So closing value of investment would be number of share multiplied by closing price per share. So for first 4 entries it would be 0 because we sold the shares. And for the last entry, closing value would be number of share multiplied by closing price per share. Next is total gross amount paid or credited with respect of holding, that is dividend income. The person received dividend income of $5 per share in month of November. So first and fourth entry has been sold before the November. So dividend would be received on second, third and fifth entry. So dividend value would be number of share multiplied by $5 per share. Next is gross proceed, that is sell value. So our sell value would be number of share multiplied by sale price per share, and for last it would be 0 because we didn't sold the shares. My first table value is in dollar, but in ITR all values go in INR. So for the conversion in dollar into INR, we will use telegraphic transfer buying rate of SBI. So rule for conversion for investment like purchase price, max price, closing price and sell price, we will use conversion rate of same day. And for income like dividend, interest and capital gain income, we will use conversion rate of last day of previous month in which income has been received. For example, we have received dividend in month of November. For that, we will use conversion rate of 31st October 2024, that is 83.68. So these are the telegraphic transfer buying rate which I have used for the conversion. So for initial value of investment in INR would be initial value in investment in dollar multiplied by conversion rate of same day, that is 14 October 2021. Peak value of investment in INR would be peak value in dollar multiplied by conversion rate of same day, that is 5th July 2024. So for the fourth entry, peak value in INR would be peak value in dollar multiplied by conversion rate of same day, that is 24th April 2024. Next is closing value in INR would be closing value in dollar multiplied by conversion rate of same day, that is 31st December 2024. Next is dividend in INR would be dividend in dollar multiplied by conversion rate of last day of immediate preceding month. So income has been received in month of November. So we will use conversion rate of 31st October 2024, that is 83.68. Last is sell value in INR. Sell value in INR would be sell value in dollar multiplied by conversion rate of same day, that is 10th July. In same manner, we will calculate values in INR for the remaining entries. These 4 entries has been sold. So now we will understand calculation of capital gain and tax on that, which I have done on next sheet. These values I have taken from the last sheet. Date of acquiring is date of purchase. So these are our purchase dates. Initial value of investment is purchase value of investment. So these are our purchase values. Sale date. These are our sale dates. Gross proceed from sale is sale values. So these are our sale values. Capital gain. So capital gain in dollar would be sale value in dollar minus purchase value in dollar. For the first entry, holding period is more than 24 months. So that will be classified as a long-term capital gain, and shares sold before 23rd July 2024. So tax would be at the rate of 20% and indexation benefit will be available. For the second entry, holding period is also more than 24 months. So that would be classified as a long-term capital gain, but shares sold after 23rd July 2024. So that would be taxed at the rate of 12.5%. And for third and fourth entry, holding period is less than 24 months. So that would be classified as a short-term capital gain and tax as per slab rate. Capital gain is our income. So for income, we will use conversion rate of last day of immediate preceding month in which income has been received. For example, we received income in month of July because we sold share in month of July. We will use conversion rate of 30th June. We received income in month of December. We will use conversion rate of 30th November. First, we understand calculation for these 3 entries other than indexation. So, our capital gain in INR would be capital gain in dollar multiplied by conversion rate of last day of immediate preceding month, that is 30th November. But in ITR, we can't mention capital gain directly. We would require purchase value and sale value. So, we will use same conversion rate for calculation of purchase value and sale value. So, our purchase value in INR would be purchase value in dollar multiplied by conversion rate of 30th November. Sale value in INR would be sale value in dollar multiplied by conversion rate of 30th November. So our capital gain would be this, sale value minus purchase value, and this is matching with this value, and it would be taxed at the rate of 12.5% because shares sold after 23rd July 2024. And in same manner, we will calculate short-term capital gain. So our short-term capital gain in INR would be short-term capital gain in dollar multiplied by conversion rate of 30th November. So our purchase value in INR would be purchase value in dollar multiplied by conversion rate of 30th November. Sell value in INR would be sell value in dollar multiplied by conversion rate of 30th November. So this would be our capital gain. This is matching with this. In same way, we will calculate short-term capital loss. So our purchase value in INR would be purchase value in dollar multiplied by conversion rate of 31st March. Sale value in INR would be sale value in dollar multiplied by conversion rate of 31st March. So this is our short-term capital loss. So our net short-term capital gain would be this. And it would be taxed at the rate of 30% because person fall under slab of 30%. And in same manner, we will calculate purchase value and sale value for the first entry. Now we will calculate index cost of acquisition. And this is the formula of the index cost of acquisition. CII of the selling year divided by CII of the purchase year multiplied by purchase value. You can get CII from income tax website. I have given this link in description. Click on view all CII. Our purchasing financial year is 21-22. For 21-22, CII is 370. And our selling financial year is 24-25. And for 24-25, CII is 363. So our index cost of acquisition would be CII of the selling year divided by CII of the purchase year multiplied by purchase value. So our long-term capital gain would be sell value minus index cost of acquisition. And it would be taxed at the rate of 20% because shares has been sold before 23rd July 2024. Now let's see how to fill this detail in ITR. Log into income tax portal. After login, direct filing section will reflect. Select assessment year 25-26. Select mode of filing online. Click on continue. Click on start new filing. Here select the status as an individual. Click on continue. Select ITR form. Select ITR2. Click on proceed with ITR2. Here one note will pop up that new regime will be our by default regime. Click on OK. Click on let's get started. Here we need to provide the reason for filing. So I am selecting first taxable income is more than basic exemption limit. You select appropriate reason based on your applicability. Click on continue. Now we need to select schedules. Here I am going to select schedule based on our foreign dividend income and foreign capital gain. I am not going to explain complete ITR because I have already explained that in my previous video of ITR2 with foreign assets, and I have given the link in description. Select on income category. Select schedule capital gain for declaring foreign capital gain. Select schedule other sources for declaring foreign dividend income. Schedule SI will automatically selected because we have selected capital gain schedule. Now select schedule FSI for declaring foreign source income and schedule TR for claiming tax relief on that. Now our next category is others. Select schedule FA for declaring foreign assets and click on continue. Here one note will pop up that ITR will be pre-filled based on your AIS and TIS. Click on OK. Here I am focusing on how to report and declare foreign dividend and foreign capital gain. So here I am only going to fill respective schedules and these will be exactly same in both tax regime, old and new. So first click on schedule capital gain to report foreign capital gain. Click on OK. For reporting of short-term capital gain on foreign shares, click on A. Now click on point number 5 from sale of assets other than A1, A2, A3 or A4. Now click on edit. According to me, we need to fill sale value in point number 2, assets other than unquoted shares, because shares are listed on US stock exchange. But some experts are saying we need to fill sale value in A column. So if you fill detail here, then don't need to be worried, tax treatment in both cases will be same. So our total sale value is, we can provide consolidated data. So total sale value is 5,01,011. Now we need to provide cost of acquisition, that is purchase value. So our consolidated purchase value is 4,14,064. If you have done any expenditure in connection with transfer, you can mention here. In my case, it is 0. So our net short-term capital gain is this. It's matching with our calculation. Click on save. Now for declaring long-term capital gain on foreign shares, click on B. Click on point number 9 from sale of assets where B1 to B8 above is not applicable. Click on edit. For long-term capital gain on foreign shares, if we have sold before 23rd July 2024, we need to provide details in first column. And if we have sold on or after 23rd July 2024, we need to provide details in second column. As per our example, in one entry, we sold share before 23rd July 2024. So this long-term capital gain will go in first column. So our sell value is this, 290 to 160. So again, I am mentioning in assets other than unquoted shares. So our sell value is 290 to 160. Now we need to mention cost of acquisition, purchase value. So in this case, our purchase value will be index cost of acquisition, 287,984. And if you have done any expenditure in connection with transfer, you can mention here. In my case, it is 0. So my long-term capital gain, shares sold before 23 July 2024 is this. It's matching with our value. And in next entry, we have long-term capital gain where we have sold shares after 23rd July 2024. Sell value in this case is 3,66,632. So in second column, because we sold after 23rd July 2024, we will mention sale value here, 3,66,632. Here we need to mention purchase value without indexation. So our purchase value is 1,89,203. So our long-term capital gain after 23rd July 2024 is this, and this value is exactly matching with our sheet. Click on save. Now click on point number F, information about accrual in receipt of capital gain. Here we need to provide in which quarter we have received that income. So we need to segregate income quarter wise. Our short-term capital gain on foreign shares will be taxable as per applicable slab rate. So it will come under point number 4. And now we need to select quarter. As per our example, on 19 December we have short-term capital gain and our net short-term capital gain is this, 86,947. So short-term capital gain arise on 19th December. So it will come under fourth column. So our net short-term capital gain is 86,947. Our long-term capital gain, which we have sold before 23rd July 2024, will come under point number 8, and we have sold after 23rd July 2024 will come under point number 7. So our long-term capital gain sold after 23rd July 2024 is 1,77,430 on 19th December. So it will also go in fourth column. So our gain is 1,77,430. So long-term capital gain sold before 23rd July 2024 is this, and our sale date is 10th of July. So it will come under point number 8. 10th of July will come under second column. So our gain is 4,176, and your these values should be matched with your BFLA. So you can cross check with BFLA and fill accordingly, otherwise error will occur. Now click on confirm. Our next schedule is other source income. Here we will report foreign dividend income. Click on it. Click on first point, gross total income chargeable to tax. Click on edit. This is our Indian dividend. Here we will add our foreign dividend. As per our example, person received total dividend of $150 in month of November. In INR value is 12,552. And this dividend calculation I have already explained in my video of Form 67, and I have given the link in description. So our foreign dividend is 12,552. So in Indian dividend we will add foreign dividend. Now it is 19,586. So we will mention here 19,586. Click on save. Now go to point 10, information about receipt of income from other sources. Here also we need to provide quarter-wise dividend income. So in first quarter I have received Indian dividend of 1,034, and in second quarter I have received Indian dividend of 2,000. So in third quarter I have received foreign dividend as well as Indian dividend. So my foreign dividend received in month of November, it is 12,552, plus I have received Indian dividend of 2,000. So total will be 14,552. And in fourth quarter I have received Indian dividend of 2,000. Sum of this dividend should be matched with our gross dividend income. Now click on confirm. Our next schedule is schedule FSI. Click on schedule FSI for declaring foreign income. Click on details of income from outside India. Click on add. Here you need to provide country code from where you received the foreign income. In my case, it is USA. Here you need to provide your TIN number of that country. If you don't have TIN number, you can provide your passport number. Here I am providing dummy passport number. Here we need to add the income in respective head. So we have foreign dividend income and foreign capital gain. So foreign capital gain will go in capital gain head. So in my case, foreign capital gain from US is total 272,729. 272,729. Tax paid outside India So in my case, tax paid outside India will be 0 because US don't deduct tax on capital gain income as per DTAA agreement. So here figure will be 0. Now we need to provide tax payable on such income under normal provision in India. So tax payable under normal provision in India will be our income multiplied by average tax rate. So our average tax rate is 16.7% as per my example. If you want to understand calculation of average tax rate, you can go through my video of Form 67. So our total income will be multiplied by average tax rate, that is 16.7. So our tax payable under normal provision in India will be 45,546. 45,546. Our tax relief on foreign capital gain would be minimum of both countries' taxes. So it would be 0 because we haven't paid tax on capital gain in US. Here we need to provide relevant article of DTAA. So here relevant article number will be 13 for capital gain income as per DTAA with US. If you have loss on foreign shares, then you don't need to fill details here. Our foreign dividend income will come under head of other source. Dividend income from US is, as per our example, person received total dividend of $150 in month of November. In INR value is 12,552. 12,552. Tax paid outside India. We have paid outside India 25% tax. In INR it will be 3,138. 3,138. Now we need to mention tax payable on such income under normal provision in India. So tax payable under normal provision in India will be our dividend income multiplied by average tax rate. So it is 2096. 2096. So our tax relief will be minimum of tax of both countries. So minimum amount is 2096. Now we need to provide relevant article number of DTAA. Here our relevant article number will be 10 for dividend income as per DTAA with US. Now click on save. Click on confirm. Now click on schedule TR for tax relief. Here data will automatically populate from schedule FSI. So there is only one entry will reflect for tax relief because we have paid tax on dividend only. We didn't pay any tax in US on capital gain income. Now here we need to specify section. Here we need to select section 90 as we have DTAA agreement with US. And you will have to answer this question. Any tax paid outside India on which tax relief was allowed in India has been refunded or credited by foreign tax authority during the year. If you have received any refund from foreign tax authority, you can click on yes and add detail. In my case, it is no. So I am selecting no. And for taking this relief, we need to file Form 67 before filing the ITR. And as we haven't paid tax on foreign capital gain in US, so only dividend entry need to fill in Form 67. Click on confirm. Our next schedule is Schedule FA, details of foreign assets. Click on it. Click on point 80, details of foreign equity. As we hold foreign shares, click on add. In Schedule FA, we need to provide all details of shares which we hold and sold in calendar year 2024. Here you need to provide country name. So as per our example, person holding shares of US company, and this is the details of company, country name. So in my case, it is USA. Name of entity is the name of company. So in my case, it is Microsoft. Address of entity. This is the address of company. Zip code. Zip code is this. Nature of entity. So it is a company listed on US stock exchange. Date of acquiring. So this is my FA details. Date of acquiring is 14 October 2021. October 2021. Initial value of investment. Initial value of investment in INR is 226,886. Peak value of investment. So our peak value in investment in INR is 3,88,355. 3,88,355. Closing value is 0. Closing value will be 0 because we sold the shares. Here we need to provide gross amount paid or credited in respect of holding. We didn't receive dividend on this because we sold share before the November. So it will be also 0. Now we need to provide gross proceed from sale. Here we need to provide our sale value. So our sale value in INR is this. Click on save. Here you can see our first entry is reflecting here. In same way, by clicking on add button, I am doing the remaining entries. Here you can see I have done all the remaining entries in same manner. Now click on point A2, details of foreign custodial account. Here we need to provide details of our foreign broker account. Click on A2, click on add. Provide country name in which you have broker account. In my case, it is USA. Name of financial institution means broker name. In my case, it is Morgan Stanley. Now we need to provide address of broker. So this is the address of broker. Provide the zip code. Provide your broker account number. So here I am providing dummy account number. Select status as a beneficial owner. Account opening date. Provide broker account opening date. Next is peak balance during calendar year 2024. So my peak balance is 15,53,421. Here you need to provide closing balance as on 31st December 2024. So broker account balance as on 31st December 2024 is 3,68,703. For converting this value in INR, I have used PT buying rate of same day. Next is gross amount paid or credited to the account during the period. So select nature of amount received. So as per example, we have received dividend income and sale value. So as per me, we need to select sale value because sale value is higher and mention the sale value in INR. So our sale value in INR would be sum of sale value, that is 11,64,761. Now click on save. Now you can see our broker account entry is reflecting here. If you have more than one broker, you can click on add and add that. Click on confirm. In this manner, you can report your foreign dividend and foreign capital gain in ITR. If you have any doubt, then drop in comment section, and don't forget to like and share my video and subscribe my channel for latest update on ITR. Thank you for watching.